via social media, then DFS needs to potentially protect them as well.
Well, and this also raises a question for Facebook, especially on a morning when German regulators came out with an additional round of...
So hi guys, welcome to the 25th episode of the Technical Market Breakdowns. So yeah, you heard me right, 25 episodes. We've been doing this now for more than 7-8 months. We're not planning on stopping anytime soon. Instead, we're planning on doing it better and better every single day. So today we have quite a lot that will be going on in the markets. We're spotting some very good opportunities, both short-term, long-term, and in different asset classes. So trading is quite fast now. Markets are volatile. We're expecting more volatility in the markets because of where the cycle is. So for those who don't understand such things, you can do more research on that. And this means we'll be witnessing some increase in volatility in the markets. Obviously, there are tensions between China and US. Like on Saturday, we had President Trump and the Chinese president meeting and agreeing to reform through the trade talks. I still don't think that will bring a big change to the market, so I'm still holding into my sentiments. Until that day we'll hear there's a deal, that's when I think things will be changing. But as for now, I'd rather be a pessimist than an optimist. So using that as my analogy, I still stick to some of the positions that I'm holding. Other things that we'll talk about on the fundamentals, perhaps on Friday we have non-farm payrolls. You can check them out on our website. And also another thing is interest rates. Interest rates now are a big deal. Like yesterday, actually today in the morning, we had Australian interest rates cut to 1%, so it's the lowest we've ever seen. But these things are happening all over the world, so all currencies right now, part of the world, we are now entering the global recession. And once we are entering a recession, definitely rate cuts, fiscal stimulus, and other tools that monetary policy makers and the governments use to bring back the economy will be applied to the markets. So I'll be doing 3 setups today. I'll be doing gold, I'll be doing oil, and maybe I'll do EURUSD, because we are now focusing on the main assets that will be moving. So we know liquidity usually moves to the major assets during such times, and that's why we are moving to focus now more on the major currencies and on the commodities. So I have several setups, but I'll only be sharing three of the best. So I never chose the worst. Instead, I decided to pick the best for you, and I think there's potential for making a significant number of pips in those positions, and Caleb will come in and do the other positions. So nothing much, just that, and we can just go straight in and start doing the analysis right now. So okay guys, this is oil on the weekly chart. I'll start off from the weekly chart. No need to go down to the monthly, to go up to the monthly chart. So I'll start off from the weekly chart, and it's clear that oil is in a downtrend direction. As you can see, the formation of lower highs. This was the second bounce of the trend line, and we're now approaching the third bounce of the trend line. But if you look at it from a clean perspective, you discover that oil never formed a new low after this recent lower high that came in at the $64-65 mark, and we had that collapse. So this means that oil still has the potential to come back lower, and honestly I'm expecting oil to sink back lower all the way to $30. And I'll tell you that $30, $35. So probably in the next 6, 7, 8, 9, up to a year, we may see oil trading at the $35 mark before we hit the crisis. Looking at history, before we hit a financial crisis, oil usually precedes the financial crisis by going lower substantially. So I expect oil to be sinking lower from a fundamental perspective. From a technical perspective, still I expect the formation of new lows to come in at the $35, $33, $30 mark, and you can see there's a lot of potential pips to be made from that setup. So on the weekly chart, not much that I can add to what I have on the daily chart. So I'll go back down to the daily chart and show you what is happening on the daily. Yeah, so this is the daily chart, and on the daily chart I also have this channel. It's a downward sloping channel. This is not the same channel that I have on the weekly chart. This is a different one. So we had the first drop, then we had a correction, then we had a drop, and now we have had this correction, which I think I can interpret as wave 1 up to wave 5. I will just do the labeling for you guys. So this was wave 1, this was 0, this was 1, this is 2, this is 3, and now we are hitting 4, and probably 5 will come in somewhere lower than this, maybe 45, 42, 40, or even lower. So currently I'm short on oil, and my stops are above this level. I'll tell you the level for the stop for this one. Why will I tell you that? Because I expect the markets to probably squeeze out all these people who have executed shorts at this point. And if you have that short squeeze, then I expect the markets to move all the way to 61.5. So I have some allowance of being wrong. 61.5, quite a wide stop. I never use wide stops that much, but for this one I'll be using a wide stop. But again, the reward is really big. Going down to the 4-hour chart. On the 4-hour chart we have, so I actually went down to the wrong chart, I'm sorry. So yeah, this is my 4-hour chart on oil. So I had this channel, it was an upward channel, we had a correction, then we had a drop, so I'll actually remove it because right now it's not helping me. Anyway, oil is currently trading at the 59.5 mark, and you can see I have the level marked well, and it's respecting the level. Some sideways movement, probably an accumulation of orders. My stop again comes in up there. So what I'll be doing is, as the markets will be moving lower, I'll try and interpret the patterns, and as the patterns will be forming, I'll try and make money using the patterns. So that's basically what I expect on oil. I won't go into much detail to show you anything else. When the developments will be coming, when the markets will be moving, definitely this is not the last video we are doing. I'll be showing you reasons why you perhaps need to change your outlook, and how, if you change your outlook, how you should be looking at markets. But for now, that's my outlook on oil. 59.5, first target 55, second target 50, third target 45, 40, 35 ultimately. So probably a lot of pips, but if you play it short term, you have the direction. It's upon you now to take chance in timing the entries and exits and following the long-term trend direction. That's my outlook on oil, and I'll now go down to the next pair, which is gold. So I'm down to the next pair that I'll be doing. This is gold. And on gold, we've been getting the calls right. For now, we've been moving with this market pretty well, and we think there's potential to make a lot of money on this commodity right now. So we got the move from 1340 to 1265. We had gotten the move from 1265 to 1340. And we also got the move from 1265 to 1360. But now we never saw the break past 1360. But now we've finally taken out 1360. This gives us a signal that perhaps we could be beginning the bull market. We all know gold has been trading relatively low considered to its value and how it has been trading historically. If you look at what has been happening right now, we still think gold is cheap, and for the long-term investors, this is their buying point. But for us, we are not long-term investors. We time, we're active traders. So what do we see ahead of gold? On the weekly chart, I can map out this channel that I have. So we have one bounce, the second bounce, and now it looks like we have taken out the channel. This means that we have not yet closed above the channel, but we have closed above the channel, but we don't have significant momentum taking us above the channel. So I think we'll be witnessing gold move higher substantially, at least to 1480. But before getting to 1480, there are some 3 or 4 scenarios which I think might happen on our way to 1480. So on the weekly chart, I don't have the right patterns to show you the 2 or 3 scenarios, but on the weekly chart, I expect 1480. After we touch 1480, expect a correction down lower to 1360. That is pegged on a condition being satisfied, which I'll show you in the lower time frames. If we get to 1450 without going lower to 1360, then I expect the markets to hit 1460, correct, and again move higher. But since we always do these things weekly, we'll be updating you on where we expect the commodity to be moving. But on the long-term direction, we expect this commodity to hit at least $1,700, $1,800, probably by the end of 2020. So going down to the daily chart on the lower time frame, now to time how we do it, to look at the patterns that we normally follow and how we capitalize on these patterns. So this is gold, and on gold we have 1, 2, 3, 4, 5. So we've gotten pretty much the whole of this move. We've been tracking it, following it, and you guys have seen us do it. I'm not saying this to show you that we are kings at it. We have also been wrong on some moves, and you've seen us being wrong, but at least you know now that's how trading works, and you can see that you're able to make money if you only capitalize on the number of times you're right compared to the number of times you're wrong. So looking at gold, this could be wave 5 on the Elliott wave pattern, because if I replay this pattern from this point to this point and measure it to bring it to this point, then you can see clearly that gold has hit the level that it's supposed to hit, 1425. But I have a strong hunch. It's not really supported by some good technical analysis. I don't have very good technical analysis on this one, but a strong hunch that you'll be seeing gold move all the way to 1480. And that's why at this point I'm insisting on a long position to 1480. But if I'm wrong, which could happen, and it happens, then gold may sink back to 1360. This is the level I'm looking for to buy, 1360. If we are sinking lower to 1360, then I'll be buying at 1360, expecting 1480. But I also expect this move to come in, and perhaps it will be an impulse wave just like this one, a straight leg which will take place maybe in 2-3 weeks, and the move will be done. Going down to the 4-hour chart. In the 4-hour chart, I have a setup which supports what I'm telling you. So this is the 4-hour chart. Here you can see my risk reward tool coming in handy. So we have 1, 2, then we have 3, and now this is wave 4, and probably we'll see a wave 5 coming in at 1480. But before going to wave 5, probably we'll also see a move to touch this line, and again a correction to 1360. So there are two scenarios. One, we'll see a move, which I can first hide this one. So probably we'll see a move to touch this level, this line, then we see a collapse down to 1360. That's scenario A. We get a move all the way to 1405, retouch this line, and then we move lower, closing off a gap which opened at this point on Monday, so yesterday. We could also see a move downwards directly to 1360. Then when we get to 1360, we'll see a move back up, taking out 1385, taking out 1405, taking out 1420, and ultimately moving higher. The simple thing that I'm trying to communicate to you guys is, on gold, I'm looking for a bullish setup. I'm not trying to capitalize on shorts right now. The momentum has already decided the direction, and I play momentum on commodities. Simply follow the trend direction. I'll stop my analysis at that point and see you next week when you'll be reviewing gold. This is the last pair that I'll be looking at, EURUSD, and I'll start off from the weekly chart. Before starting off analyzing EURUSD, I think we are in a reversal phase. What I mean is, the dollar might be changing direction from bullish to bearish, and euro definitely might be changing direction from moving lower to moving upwards. However, I'm not sure, so I have limits for confirming my hypothesis and how I can change my hypothesis. But that's just a gist of what I expect on these markets, and pretty much of what I'll be saying today will be pegged on that. I expect a reversal, and that means I expect some bullish momentum to be coming in. Using that, you can see we had a break of this downward line. So it's taken quite some time to close off above this line. You can see we've been moving lower now for almost the last 2 years. Euro actually started dropping in February 2018, and now we're in June 2019. So probably 1.5 years we've been seeing euro sink lower, 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 and the trend has been developing, and we've been capitalizing on the trend. But right now we are approaching this level S1. You can see some slight consolidation as the markets are moving sideways. Always long consolidations on the weekly chart will come as a result of orders accumulating. So once you see such consolidations after a long move in one direction, you should be preparing for a reversal. So we had a break above this line, a retest, and now we had a continuation, but now this looks like it will be going down lower. On the daily chart, I don't buy into the idea of the markets going lower, and I'll show you why. I just think we still have the potential to be moving higher. So this is euro on the daily chart. The last leg of the correction usually comes in different ways, and one of the ways is in this channel. After having a drop, you may get a channel signaling the end of momentum, and now this marks the beginning of momentum in the other direction. So you can see clearly we had a bounce, a pullback to touch the midline of this channel, then you had a breakout of this sloping downward channel, and now currently the markets are trading at 1.13, forming an inverted hammer. If this candle closes like this, I'll be buying euro, because this shows me that euro is going up. So honestly, I'm expecting euro not to go below 12.50. If it goes below 12.50, probably it has changed my analysis. So I don't expect the market to go below this line, and if they do, probably I'll refine my analysis to check what I could be doing wrong or what will make me wrong. So right now I expect the euro to be moving higher to 14.50, 60-70% probability of that happening. When it will happen, I'm not sure, but I think we'll be seeing the euro move higher to 14.50 and ultimately 1.18. But now that is pegged on a break of 14.50, 14.50, 15.50, 1.1250. This 400 pip zone is a very strong zone for euro, and looking at history, you can see euro has been playing between this zone for quite some time now. Most of the last 6 months, this is what has been basically happening on euro. You could have made some money capitalizing on this trend, but it's now over, and you have to look at what is happening in the future. So probably 150 pips potential before the end of Friday. I also expect some significant momentum to be coming back to the markets. We all know when reversals take place, we start off with huge momentum. So I expect the momentum to be starting and the markets to be moving higher, and that will be our narrative for the euro. And that's it for the three analyses that I've given you. So I've shared euro, shared oil, and I've shared gold. So use that with your own analysis. Don't take this as direct signals. We don't believe in taking signals. We believe in incorporating other people's perspectives and using that to try and understand your own and come up with something solid, something that can make money. So I'll stop at that and let Caleb take over from me.
Hey guys, so today we'll look at the pairs I look at is basically Aussie dollar and USD CAD. We'll do a follow-up of the trade that we looked at about 2 weeks ago, which went phenomenal, and it was a beautiful trade. So we'll take a look at that, but let's start with Aussie dollar, then go to USD CAD. So down to the Aussie dollar, we all know, as Ken was saying in the introduction of the video, that earlier on today the RBA, Reserve Bank of Australia, released their interest rate announcement, and they lowered it to the all-time lows of 1%, which greatly affected the market. So we've seen the market gain some momentum to the upside. But looking at it technically, what we can see, we've been within this channel that you're seeing over here for a very, very long time. And if you've been following our analysis, we've been respecting this channel and not trying to predict that the channel will be broken or anything, just going with the key levels and the patterns that are being created. So looking at it on the daily time frame, that is what we're having. If we come closer to what is happening recently, is that we found support down here. We have drawn my A, and market retraced back up to the B level and went back to C, and now we came back up here and we found resistance. So according to my analysis, it's sort of, we need to watch out if we're having a ranging market, just in case. So following yesterday's close, we had this very strong bearish close that almost engulfed 3 previous day candlesticks, and sort of I had a short position around here, which we'll look at on the 4-hour chart. But we should not neglect the fact that market might be in a sort of consolidation before we get that break to either the upside or continue to the downside. But I'm favoring more sentiment to the upside. We all know what's happening to the US dollar, and across the board we are seeing the US dollar losing strength. So I'm really favoring a long-term upside trend, but for now we are sort of in a ranging market. And if you go down to the 4-hour chart, so yeah guys, this is a 4-hour chart, and as you can see down here, I wrote watching ranging market. So as I was saying on the daily chart, I took a short position up here, which we can see now market is, after we got the interest rate announcement earlier on today morning, we're seeing the market going back up, but I basically broken even on this trade. So whatever happens in the market, I'm ready for it. If we come back up and break above 0.7025 and go further up, I'm more bullish on this trade. But I've taken a short-term trade that the market, after breaking this trend line that you're seeing here, this trend line, as you can see, it came all the way down. We had this fast break which was retested beautifully, as you can see. Then the market went all the way to touch our target level 0.7025, and then after that we had this sort of shooting star close formation, and the market started falling with so much momentum. So I'm still sort of bearish, which I've already broken even on this trade, so anything can happen, but I'm still targeting that the market can come and retest this trend line again at 0.6920 level before market shoots back up. If not, we can go further down and come and retest this level yet again down here. As I said, we might be in a ranging market, so I'm watching for that. So you should always be prepared for this. So if the market comes and closes above 0.7025 and closes above with a lot of momentum, then we're favoring the upside. But for now, that's what we're having on the Aussie dollar. So apart from that, I'll go down to the USD CAD. So yeah guys, we're down to the USD CAD, and as I've been talking a lot about this pair, we followed this pair for a while now, ever since May, when we had this first analysis, when we saw the market going to tumble. So this is basically the weekly chart, and you can see how we've respected this trend line. We had this first touch, second touch, and third touch, and following our analysis, as you've been following on our previous technical analysis, we are anticipating that the market will drop from here, and you can see that strong momentum coming. We respected our Fibonacci level 78.6, and also beginning our our Elliott wave formation, we had that 1-2 formation, and now we are strongly waiting for this 3 formation all the way at 1.2082 level if the market gains that momentum to finish our third wave. So that's basically the weekly chart. If we go down to the daily chart, seeing what is happening recently, we had this wedge up here, which we had a formation, market came back down, we retested, or rather touched the major trend line that we have, came back up, retested the line that we had, and this is the trade that we were looking a few weeks ago, 2 weeks ago, that we were looking at, and we respected Fibonacci level 61.8. We did come and touch our resistance level 1.3445, but still we formed a shooting star formation, and after that market tumbled all the way down. We also had the FOMC where they released their interest rates, which helped pump this pair to fall further down. So everything was factored into the price, into the market, and the market continued tumbling down. As you can see, we almost reached our target level 161.8, which you should always keep in mind that in the markets you should have dynamic areas of support and resistance rather than a static one. These things change. Don't always wait for that perfect entry. As I said, up here we didn't get that perfect entry to short it, and also down here we didn't get that perfect level to exit, but still it was a good place to take your profits. So looking at that, what we're expecting now, if you go down to the 4-hour chart, so basically this is what we have on the 4-hour chart, and you can see down here we've sort of entered into a channel formation. So what I'm expecting to happen is maybe we can have sort of another fall all the way to touch our ultimate target down here, and then we can have a retracement back to touch this level, this trend line that we can see, and the market after that can catapult all the way down to form new lower lows in line with what Ken was talking about on the EURUSD, targeting that higher levels, higher highs and higher lows formation. So that's sort of what you can see over here, but sort of in an opposite manner, such that we can go fall further down. If we're not able to get this momentum to the downside, we can come straight and touch this level, break this channel, and have that downward momentum. So basically that's what I'm watching. If we get to fall further down, I can wait for another entry. We can't possibly wait for the market to come and touch the channel yet again, because it's quite steep. So it can come and float around here, maybe touch our Fibonacci extension level before getting that upward momentum. But if not, if this level is broken and we close up above, we're looking for that target. So targeting back up at 1.320 before we get that downward momentum. So that's basically what I have on the currencies. I've been mainly looking at cryptos for the past few weeks, and slowly we'll come and integrate the cryptos into our channel and show you a bit of videos what we've been doing for the past almost an year and a half, because we started doing cryptos back in 2017. So that's, yeah, about 2 years or so. So we'll come and incorporate that very soon. We've just been taking the time to put in the work that is needed to understand what is happening with the Bitcoin, the Ripple, the Ethereum and all that, but soon we'll come and release that so that you people can also get an understanding of what's going on in the crypto space. Many people have been asking, so that's basically what we'll do. Apart from that, be sure to like, share and subscribe, and tell a friend to tell a friend that they, to come and check our videos. Maybe if you have any suggestions, you can comment below. You know our social media platforms, you can always hit us up there, and also our WhatsApp group. You can come and join where we almost update on a daily basis what we are seeing in the market, what is happening, unlike the YouTube channel where we post weekly analysis on the, like you can see today, I can say maybe I'm long over here, but in our WhatsApp group we can update to maybe we are having that momentum to the downside. So we update people and help them understand what is going on in the markets. Also in terms of fundamentals, we also update people there. So be sure to like, share and subscribe, and tell a friend to tell a friend. So till next week, see you guys.